Everybody has their own form of Jordans in trading, their own little logic, the thing that makes them feel like they're a basketball player like Jordan. I'm a real good trader because I use GAN. I'm a real good trader because I use Elliott Wave. I'm a good trader because I do this and I do that. Okay, good for you. But you wearing those Jordans ain't making you a basketball player. You using these logics that you think are the reasons for the market going up and down. These indicators, these overbought, oversold indicators, that's not making the market go up. How many times have you seen an oversold indication that was bullish divergence too, and the market just kept going lower, just kept going lower, just kept on going lower? That was the wake-up call for me because I was a perpetual bull when I first started. I only could want to be a buyer because it made sense to buy low, sell high. I could not grasp the idea of selling something I don't own and making money when it goes cheaper. It was an alien concept to me. I couldn't trust that, and I just focused on being a buyer. And there was many times where I was trying to be a buyer as a 20-year-old, not knowing what the hell I was doing, and everything technically, based on every retail thing you can imagine, said that it was going to go up from there. And there'd be this little tiny little move up. And I'd be, yeah, I'm on side now. And the only thing it did was take out a short-term little high, the run trailed buy stops, and then the fucking floor would fall out. And I'm in drawdown. Because I don't have a stop loss. I'm still just in drawdown. And I'm thinking, okay, well, it just needed to do that little bit of move. Now it's gonna go up. And the whole time I'm watching it go lower and lower and lower. And then like finally I gotta pick my guts up. There it is. Let me at least have $200 left in the account. Let me just have that. And if I would have held on to that, it would have took that and more. So that was my wake-up call that there's something else going on here. Like I gotta look deeper into what's going on behind price. And the algorithm is designed and coded in a way where it will capitalize on two primary things. Where there are pending orders, and it does not know how many orders are above or below the marketplace. It doesn't know that. It cannot worry about that because that's always a dynamic, fluctuating value. Just like you look at level 2 data. You'll see the orders there. There'll be a big block. There'll be a 500 block, a 300 block, sitting at a price level. And then as we get closer, that order won't be there anymore. It'll be less. Why? They lose interest. They lose the interest as it's getting closer to it. Why is that occurring? Because that's spoofing. But see, you're looking at it differently. You're looking at it through the lens of retail. Like, it's going to go there because there's a big number there. That's bullshit. That's how you get tricked. That's how you fall victim to that nonsense. These things that are trying to point to where orders are, all you have to do is look at a 1 minute, a 5 minute, 15-minute time frame. And you'll see every liquidity pool that these little bubbles or these little things are showing you. You don't need to know a number. The number is that's the red herring. That's the Judas swing gimmick of that thing, that process of visualizing how many orders are there. Those orders are not all literal. They're not actually going to be there when price trades to it. They'll pull them. But they're using, big, large institutions can place orders there to influence other traders to book price for that express purposes of tricking them, knowing full well that every transaction that takes place leading up to that level that never gets hit, other traders are going to look at the chart and say, oh, this is one of those fanny pack patterns. And the last time I traded it, I got more money for my fanny pack. Come on, man. Like, if you give it enough time, you can come up with a gimmick or an excuse to get into anything. But you have to strip it down to the very bare essentials. The markets go up for buy stops. They go up to reprice and or rebalance and inefficiency. That's it. It goes down for sell stops. Or it goes down to reprice to or rebalance an inefficiency below market price. That is it. If your patterns that you trade off of happen to agree and overlap in that instance, that's why your shit worked. It wasn't because of your harmonic pattern. It wasn't because of Elliott Wave. It wasn't because of anything except for that's what it was going to do at that time. If you go through all of your losing trades, I promise you it will be a revelation. But most of you don't even give a shit. You haven't journaled anything, so you don't have the ability to go back and study what you did wrong. But the ones that have, go back and look at where your losing trades occurred. And then look at what I teach, and you're going to see mine standing in front of your trade. what I tell you the market's going to do and how it's going to behave in book, that's why your trade failed. And vice versa. Look at all your retail shit, and the times that it works, it's because it's in agreement with what I'm teaching. And I know damn well that's narcissistic, isn't it? That's arrogant as shit. You're damn right, because it's the truth. That is the truth. And when you stop paying attention to all these gimmicks and you stop being this team mentality, VWAP team, volume profile team, VSA, supply and demand, they're all bullshit. None of that stuff makes price go up and down. Zero. You're not going to tell me the tick of the entry to get in at, which is the highest of the candlestick. You're not going to get out the lows. You're not going to trade like me. You're not going to get like that. You ain't going to get it like that. Not in any of that other Mickey Mouse shit. You're not going to. Because if any of you could have done it, you'd be doing it already. Why am I still out here barking and then nobody's coming forward and saying, here's the shit that beats your stuff? Shut the fuck up, Michael. It's still not happening. That's what's entertaining. Like you would think, seriously, you would think. Come on. I want to fucking see it, but it ain't there. But they'll come in and they'll make little remarks to try to discourage you. Because they know they can't beat it. And they can't stand it in their own skin. Seeing that they can't beat it. They can't make an excuse for how I'm able to do it. So the easiest thing is, oh, you're a fraud. Oh, you're this and that. But how do you claim that? When I have transferred the information to students that now are using it too. And now, you said I would never live stream and trade. I'm doing it in front of you. With precision elements that you can't copy in anything else. So market making is the mechanism that these algorithms book price under. There is no market maker person that's dealing between two price points that makes price. No, absolutely not. That is a dealer, but they have been miscalled as a market maker. They are not controlling price. They are not going to deliver the high and the low of the day before it happens. They're not going to give you the logic. And every single one of the people that used to be called market makers in the financial world that are now students of mine, they all collectively said the same thing. They had no idea what the fuck price was doing. They just were dealing at that price at that given time. So they were providing a pairing of orders coming together, and there it is. That's not market making. You're dealing. You're dealing in a price feed that everybody else is dealing with. You're not creating that feed. You're not changing it when it's going to keep going up to a buy-side liquidity. You're not changing its direction when it's going to go down to a sell-side delivery. You're not doing anything except for doing a transaction like anybody else is at that given time when we place a trade. So when you hear this stuff and you think, oh, well, the market maker does this. Well, the market maker's role is to be delta neutral. Yeah, dealer is. That's the dealer's job. That's not a market maker. A market maker is delivering the whole fucking range, the high and the low. And they are not going to let it go outside of that high and low unless it benefits them. And that's manual intervention. That's FOMC, it's non-farm payroll, it's CPI, it's PPI. When they go in and they know they want to disrupt as much as they can, because they're doing one of two things. They're breaking the initial sentiment going into that market release, some kind of news driver. The news itself is not causing that. That is the catalyst to blame when it's the market makers themselves that actually have their hand in the pot. They're stirring it up. That's what's going on. But when you keep hearing people talk about this stuff on TV, in books, in courses, and they repeat the same bullshit, it's the same bullshit. If you never look at it like I'm teaching you, you'll never see it. But once you start studying it this way, you'll see everything else is absolute grade A bullshit. There's no fucking reason how I could know this stuff in advance unless there was something that I knew that you don't know. Nobody gets this fucking lucky. Nobody gets this fucking close to perfect. Nobody can know the future like I'm fucking proving in live stream, in advanced commentary, one-sided commentary, very specific price levels. It's going to go to this liquidity next. Boom. Set your fucking watch. It's going to happen. Come on. And you guys are still, some of you sitting out on the sidelines, holding on to your bullshit little mechanisms, your little gimmicks. Because you don't want to switch to Team ICT. Fuck Team ICT. There's no Team ICT. You're not on my fucking team. I'm a one-man fucking army. All of you just want to learn what I do. And that's all I'm asking you to do is investigate it, look at it, test it. If you don't like it, you can't do it, then do what you're doing now or go do something else. But really put an effort into seeing it, testing it. The things I tell you, look for it. And once you start seeing it, you're going to be like, man, my stuff's saying this is a buy right now, but this guy said if this is going into the marketplace, it's probably going to go the other way. And now you're in a conundrum, aren't you? Do you stick with your program that maybe is 50% right? And now you have the wrestling match between what I taught and you have an awareness of. If you take that next trade and you lose, you're a convert. I've convinced you at that moment. But the weak-minded ones will still want to wrestle, and then you'll troll me. That's what every one of my trolls that turned student, that was the same thing they did all the time. When they started implementing what it is I teach, and they were still trying to trade their shit, and when mine was saying it was going to do something that was opposed to them, they took the trade. And when they lost, they hated me more. They fucking hated me more. They're like, man, this motherfucker, and they would troll me harder until they kept seeing that when I was teaching the concepts that caused the market to go up really, and their pattern bullshit, their Elliott wave bullshit, their whatever the hell Mickey Mouse shit is, was failing up against it, they finally broke down and sent me emails. Said, listen, I gotta be honest with you, man. This is I didn't want to believe it in the beginning, but man, what the fuck, right? And now they're really good students. They don't blow smoke up my ass. They don't cheerlead me in public. They don't lift me up and glaze me all up on social media. I don't want none of you doing that. That's not what this is about. This is about teaching you what really goes on, how to anticipate it in price action, and remove all of the confusion about what it is you're looking for and when it's going to occur. Like how else could you improve upon this? Not that I'm not going to, because I am, but if you can time when you're going to do something, you know inside of a 20-minute interval when you're going to do something, and then you have a higher time frame directional bias that tells you it's most likely going to book here. Why? Because smart money holds positions longer than just a couple seconds or a couple minutes. But there are high frequency trading algorithms that fire in and out all day long that capitalize on that. It's not just institutions and retail traders. There is a entity that is always in the marketplace, always buying and selling all day long, up, down, up, down, up, down. In every consolidation, they're buying and selling in that too. There's always volume coming through the marketplace, always. And just like you hear these things called dark pools, well, there is an entity of smart money trading that they are not on the exchanges like you think they are. And it's something I can't point to it, and I can't talk more about it than what I just said there. Just know that this isn't the only circus in town. Let's just say it that way, okay? And they have a vested interest in controlling the outcome. And that's pretty much all I'm going to say about it. But you can see these things happening every single day. If you're looking for it, you'll see it. If you've never been introduced to it, you'll never imagine it's like this. You'll think it's just random price action. Oh, well, my system didn't work today, so I'm glad I got a good stop management and didn't over leverage. Because, price is random. That's how they tell themselves. They tell them that because it consoles their doubts about what their next trade is going to be like. And the ones that are really good at money management, they don't care what the outcome of the next trade is because they know as long as they're managing their money correctly, they could be 30% wrong. 30% right and 70% wrong in what they do and still be profitable. Much like a poker player. If you watch these professional poker players, count how many times, keep a running tab, get a little notepad. This is the things I used to do. I would write down their names, and then every time they had a winning hand, I'd put a check mark next to them until that table was finished, and they went to the next table. How many losing hands did they have versus their winning hands? And it's surprising. They only had very few winning hands, but they lost. Most hands are folded, majority of the time. Study it and see. So what are they doing? They're managing their money. They don't have control over the cards. They don't have control of the other people's decision making. They have control over their money. When you're trading, you could flip a coin. If it's heads, you're going to buy. Tails, you're going to sell short. If it's a Monday, you're going to only buy the morning session. If it's a Tuesday, you're only going to buy the afternoon session. And you put these filters in. And you never risk more than 0.5%. At the end of the year, you can be profitable. Figure that out. Figure that out. You're holding for the daily range, by the way. That's the other part of it. It's the same mechanism that's being seen in poker. It's the same mechanism that's done in anything, that if you give yourself enough time for the circumstance to pan out, whereas in this case, the daily range, creating the high or high and close on the high when you're bullish, or low or low and close on the low when you're bearish, if you put yourself in those days appropriately and just hold on to it, don't jam your stop loss up, try to strangle the trade, you are in a position to capture the lion's portion of the day. And you'll capitalize what that algorithm is going to do for that daily candlestick when it books the low and the high of the day. I'm telling you the times that it's going to create those instances. The low of the day is in the first 60 minutes for stock indices. The high is formed going into 2:50 to 4 p.m. all Eastern time, okay? New York local time. So if you're bullish, you can try to nail down the low, and you'll probably lose trying to do that because you're going to try to capture the very low. And over time, you'll realize that, okay, what happens? Just wait for it to actually be there, and then trade it on the next discount array. What you'll be doing is you're going to be buying the low risk entry of the market maker buy model. Yeah, so let smart money have that smart money reversal. I'll be down there. But when you see that next fair value gap or institutional order flow entry drill or inversion fair value gap to trade off of, or order block, bullish one, that could be your entry mechanism for the low risk entry. And you ride it all the way back up to the initial high of the day, and then you anticipate an explosion where price goes up higher because they're going to want to leave that Judas swing area as fast as they can. And it's going to, a lot of ground will be made there. And people will chase it all in that big buy sign and balance, sell sign efficient that'll form then. And that's where the lunch macro will retrace back down inside that and stop those individuals out, and they'll accumulate more longs that they'll ride through the PM session of the day, and they'll get out at the high of the day forming between 2:50 and 4 p.m. Eastern time. Folks, that is your real candle range theory. That's the real power of three. That's the real ICT. Okay, that's the algorithm. That's what the algorithm fucking does. That's what it's coded to do. Anything other than that, it's manually intervened. It's as simple as that. It's 4 to 6 times a month, both buy and sell. Don't take my word for it. Go through the fucking charts and you'll see it. So the reason why you lose, I'm going to say this in closing. The reason why you lose is because you're not aware of these things happening. You have no awareness that there is an algorithm that delivers price. You have no awareness that the market is going to do something that's predetermined and it's scripted. And you get tricked by speedy little price runs to take off, and it's exactly why they do it. They're engineered, they're scheduled, they're scripted to see you get enticed to chase something or change your mind about something you might be right about. That's why when you're bullish sometimes and the market has rallied up and it creates a buy sign and balance, sell sign efficiency, and then you see it drop down real fast and it gets real close to where you entered at. Because you don't know what the algorithm's doing, you get scared and you close it out thinking, I don't want to lose on the trade. I should have got out at the high before it retraced, but I got to get out of this because I think I'm wrong. It's going to stop me out. It's going to be one of those instances where it sees my stop and it's going to get me. And you contrast that with what I show you in my transactions. I'm recording it. I have a stop loss, and I am nowhere near afraid of where it's going to go. And it'll get real close to my stop, and I don't give a fuck. Sometimes I'm adding to my position right then and there. Think about that. Think about that. What's different about that? I know something that you don't know. And what I know, I'm teaching you. I don't put a price tag on it. I'm not selling it to you. I'm not enticing you to buy books because I'm telling you don't buy them. What's going to happen is this. I'm going to publish the book. People in third world nations are going to take the book and they're going to scan it into a PDF file. And in 3 days, it's going to be all over the internet. I'm not selling books to make money. I'm putting books in print just because I want the ISBN number associated to me. When I release all the information about the things I want to teach, Everybody will go to that book, whether they get it from a pirated version off a fucking Telegram in a PDF format. I don't give a fuck about it. I'm not trying to make money on books. Nobody makes money by buying books, or selling books, rather. The margin's too low, and it's not. If I want to make money, I'll just simply fucking make money. Okay, I can go out there and press the button and make more money. If I want to have easy, fast money with no effort at all, I just put a mentorship out there. I'm not doing that either. So what am I doing? I'm teaching you because I like teaching. You think I can't make millions of dollars just putting another PayPal link up there? I can do that. At any minute, I can do that. I don't want to do that. That means I'm obligated to another group of people to think that they own me because they paid for some time. You don't own me. I like teaching. I like transforming individuals and giving them the empowerment to transform their entire future legacy and their family tree. And you can do these things. They can't hide it from you, folks. They can't. I'm trying to explain this to you. They cannot hide it from you. But if you don't understand it, you can be tricked by the things that you don't know. You get trapped in price. I don't fucking get trapped. There's no smart money traps. Smart money does the trapping. You're not trapping smart money traders. You don't even know what the fuck a smart money trader is. That's what you get when you get people teaching leaked content, lying and defrauding people. They make up bullshit like CRT. All this secondhand mentorship, watered down, has all come from me, and they don't even know how to do it right. That's why the 2024 mentorship is being live streamed. That way nobody can talk shit and say, he picked the right one, he's cherry picking. You notice they ain't saying any of that anymore? They got nothing to say now. And they're going to find something always to gripe about. Instead of saying, I'm going to take this energy, like some of the trolls I've had in the past, and I'm going to dive into this. I'm going to prove him wrong. Use that energy. Go into it with that intent that you're going to prove what I'm teaching is wrong. Let that be your fucking superpower. You're going to go in, that's it, baby. And watch what happens. Just watch. And you're going to see it's an uncomfortable feeling when it hits you. The whole time I've been telling the truth. The whole time. And all that time you wasted. You're wasting it. Why? It costs you nothing, man. It just goes to show you. I said it in Mentorship 2022. I'm sorry, not 2016 rather. I said I could literally teach this stuff on the front page of the USA Today newspaper, and it would largely go ignored because people we're weird creatures. We want something easy, and we want to say something that we did. Like, we did it. I figured it out. I did this. I did that. And a lot of my students that are male are out there actively trying to distance themselves because they want to look like they created something. And the only thing they did was create a new name. It's my stuff. I get accused, like the Democrats tell the world that the other side does this and does that, and they're guilty of it. They're doing the very things they're accusing their opposition of doing. I didn't rebrand shit. I'm the originator of all this stuff. I'm out here demonstrating it, and there's nobody else out here doing it either. They're not demonstrating it. They're not teaching the new content and showing you how it's going to work, and then it does. These are all mine. These are all my things. And a lot of my students that are male want to be like that, and they want to emulate me by trying to say they created something new. Or they'll send me tweets and I figured out something that you don't know. Listen, you don't even know the fuck I know. So stop that stuff. Okay? I don't even want to know what you think you know. I don't need to know anything more. I know the market. I know the fucking source code. You're talking to me about what I don't know. Get the fuck out of here. It's silly. Like, seriously. You don't even know who the fuck's talking to you. That's what's nuts. Oh, it's fucking fun. But market making used to be a group of men that would get together and they would control. And how would they do that? For the ones that were asking, how did they do that? If it was before it was electronic and it wasn't out there, how were they doing it? They would put orders in the marketplace. One group of the men across the table, they would have an interest in buying, and the other one would have an interest in selling, knowing that the market would book that price, mark to market, and then it would reflect in the price action. So if they wanted the higher high of the day to be met, they would have an order to buy an X amount of whatever it is, shares, contracts, whatnot, and they would cause that transaction to happen. And they would just keep doing that. And they would offer constantly higher prices. And if they weren't getting the order flow that would come by natural process of buying by the floor or other institutions or the public that would be investing in that, they would create that mark-to-market booking of price that keeps going higher. So they would artificially create these buy programs and sell programs, but it's not efficient. I mean, whenever you have a human element involved, it's not efficient. So sometimes it would not be as efficient as they would want it to be. And then you have the age of electronic trading, which I was privileged to be a part of, where I was doing the hand drawing charts, where I actually had to draw my charts out. I would put the little opening price tick on the chart, a paper chart book, and then draw it down to the low and up to the high, and then I would do the little right tick to the right for my open, high, low, close, and that would be what I would do. I had to do that 4 times a week because the orders that I have for new books of charts that would be delivered weekly, they would give you how the week settled, so it would give you Friday's trading. They would print and then deliver it to you, and then on Monday, you would start doing, the whole drawing of your charts. And I would never have to do my Friday because the next chart book that would be delivered to me by mail would be showing Friday's open, high, lows, close for the markets I would trade with. And the markets I was trading back then were the meats, currency futures, bond futures. And it's a little tedious when you have to draw your own individual open, high, low, close bar. We didn't have any alternative back then. I mean, that's just the way you did it. And then they created software programs like Supercharts, TradeStation, Metastock, that was my favorite. I liked Metastock. I think it was Equus was the producer of it, but I love that platform. That was my favorite platform, and I used end of day data, and I would plot hourly charts with the daily chart and the weekly chart, and I would just simply use a 50-day moving average, and if it was sloping up, I was bullish, and if it wasn't sloping up, I wouldn't trade it. I would wait for another market to trade that would give that indication, and I would use a 60-minute or hourly chart when it would go oversold, and it would either give me a type 2 trend following divergence, which is called a hidden divergence today. Nick Van Nice was the guy that introduced that, or a classic type 1 bullish divergence where you have a lower low in price, but a higher low in the stochastic. That was my model back in the 90s. So whenever I made money, if the market was going to go up, that's when my system worked. But it didn't work a lot. It lost a lot because the markets were not always going up. And I didn't know how to time the market going up. I just looked at the indicators to tell me when it should go up. And I got my ass handed to me over and over and over again, trusting indicators and never referring to price. Never referring to it. The only time I cared about the price is what price I needed to say to my broker when I had to physically call them to tell them what I wanted to buy at. Because that was it. And the only selling I did initially was if I use a stop loss at all, this is where I want to put my sell stop. Sell was a rare thing in the 90s for me when I first started because I didn't know much and I was already trying to do something I wasn't equipped to do. Trying to trade with money that I couldn't afford to lose. I was borrowing it off of credit cards. Of all places, that's how rushed I was. So when I am critical on all of you and I yell at you basically, telling you you're stupid for doing this dumb shit, I'm the leader of that line, man. Like if that's a Congo line, I was leading it because I was borrowing credit card money. That's dumb. It's bad. That's a bad decision. But that's how panicked I was to get out of the situation I was in. I was willing to take a cash advance off of a credit card. Nations Bank credit card. That's what it was. And I blew it. Because I was trying to do the things that many of you are trying to do, and you think you're going to be the exempt. You're not. It's not going to happen to you. Versus saying, okay, Michael says to look at the market like this. I'm going to spend the next weeks and months looking at it like this until I get comfortable with seeing and recognizing it. Then when I get comfortable with seeing it and recognizing it, then I'm going to start demonstrating setups that I've been tape reading. And then after I do that for a minimum of 2 months, minimum. If you can't give yourself and me as a mentor 2 months of paper trading, that way you're proving that you're consistently trying to use the same stuff. You're going to lose. You're going to have losing trades. There's nothing wrong with that. But you should be using the lowest leverage. That means using 1 micro lot if you're trading index futures. Let that be your benchmark. And if you're consistently able to trade with that for 2 months, then at the very, very, very minimum, I think you could entertain, not that you should, but you could entertain the idea of going after a combine challenge because you're only risking what you paid in. But you should not trade with real money yet. And if you can't get the combine passed and grow that account to fund it with one micro, you're not trying to rush to get a lot of money. You're going to be surprised how it feels when you have this monetary reward or punishment if you do it wrong. That's why you want to get bored with doing it correctly in the beginning. That's all part of the documentation stage of your development. This is all the things that you're going to have as a baseline and foundation. This is what you worked with to start from. And if you don't record all that, you won't be able to measure your advancement in your understanding and your progress. And you will feel so much better a year later, 12 months from the time you start, and 12 months later, and you look back at what you journaled and how you thought about price and the silly little times that you were worrying about things that were not even all that impactful, and all the energy and the time that you wasted worrying about the things that are not even important, that could have been used to focus on the positive stuff. And how you think about price back then versus how you think about it 12 months later, you're a new person. You'll be confident. You'll be detail-oriented. You won't be in a rush to get into a trade, and you'll feel comfortable. If you want to take a day off to do something and not trade, you're not missing anything. That's the wonderful feeling. Like, I don't ever feel like, oh, I missed the move, man. I wish I would have. No, you don't ever hear me talk like that. You never hear me talk that way. Because I know what I can do every single day. And I know when the big days are coming. I know when the big runs are going to occur, higher and lower. I know all those things. So because I know them, I know they're not an everyday instance, whereas you don't know when they're going to occur. So you naturally assume what? Every day could potentially be one of those big days. Think about it. It's true, isn't it? That's exactly how you think right now about price. You never know when that big day is going to come. I do. And if you don't get control of yourself and start giving yourself realistic expectations and living in those and not trying to be an Olympic feat type trader where you're trying to do the impossible all the time. Some of you young men are trying to impress me with what you think you figured out instead of to show me what you've learned and learned it correctly. That's what would impress me.